Hello everyone. Today is the 7th lecture for accountancy, an important subject in the field of commerce. So far we have understood about various definitions be a part of terminology of accounting, and before that we have had a detailed introduction about the chapter that what actually accounting is, yes, its characteristics, advantages, objectives, etc., etc. We have also understood the definition of accounting in the beginning of this chapter, that it is to keep records, yes, to classify the transactions, keeping record of the transactions, classifying them, summarizing them and interpreting them. Yes, the transactions which can be measured in terms of money. And the transaction which can be measured in terms of money is an economic transaction. Only economic transactions are recorded in the books of accounts. Non-economic transactions are not recorded in the books of accounts. Yes. So, if we are talking about economic transaction, then we have understood about cash transaction and credit transaction in the previous lecture. Whenever goods are exchanged against money, the amount is paid on the spot, it is a cash transaction. Yes, and whenever the payment is delayed to the future date, it is a credit transaction. Yes, transaction means exchange of a product or service of business between two or more persons in terms of money. Yes, and it can be cash or credit. Yeah. Then we have also understood about event. Event is considered to be the result of the transaction. Then we have understood about capital. An investment made by the owner to commence business is capital. Yes, the investment can be in the form of cash or in the form of an asset. Yes. Then if we are talking about drawings, the very next definition in your textbook just after capital, drawings means what? An amount that is withdrawn by the partner from the business. It can be amount or goods or assets. Whenever these are withdrawn by the owner for his personal use, is said to be drawings. Yeah. So simply speaking, whenever the owner invests something in the business is capital, and whenever he withdraws something, it is drawings. Yes, all right. The very next thing that we have learned is what is a liability. Okay, liability is any amount payable by the business to third parties. Yes, and also there is an internal liability, that is the liability towards the owner of the business. Capital is an internal liability. Yes, so liability is an amount payable for credit purchase of goods or amount payable for borrowed money. Yes, if you have purchased goods on credit from someone, yes, the amount has been delayed to some future date, this becomes a liability. We have considered this example in the previous lecture, of course. Yes, further there are types of liabilities. Liabilities on the basis of relation, which is on the basis of relation, we can say it is internal and external liability. Now, liability is an amount payable. Yeah. So, what is internal liability? This is the amount payable, the liability of business towards the owner. There is the only liability towards the owner is of capital. Yes, capital is an internal liability. All the other liabilities are in the part of external liabilities. For the credit purchase of goods, borrowed money, bank loan, outstanding expense, etc., etc. These are external liabilities. That means payable to third parties. Okay. Further, we have understood it on the basis of time. This can be current liability and non-current liability. Amount payable within accounting year is current liability. Amount payable after 1 year is non-current liability. We have understood this in detail in the previous lecture, and then we have moved towards the topic of an asset. Yes. So, what is an asset? Assets are items, any tangible or intangible, having realizable value and are owned by the business. Yes, they are in the ownership of business. They could be tangible, intangible, but having realizable value. Yes, this is the meaning of assets. In the business, the three important things to be considered are assets, liabilities, and capital. Yeah, we are going to understand about assets for now. We have already started this topic in the previous lecture and we are going to continue with the same. So, this was just the quick revision about whatever we have done in the previous lecture. So, now let us begin with the topic of assets. Yes, assets are of three types. The very first is non-current assets. Then we have current assets. And lastly, we have fictitious assets. Okay. We already know what are assets. I have explained this in the previous lecture. Now, what are non-current assets? Non-current assets are also known as fixed assets. Yes, these assets, non-current assets, these assets are having life more than a year. Accounting year is of 12 months, starts in the month of April and ends in the month of March. If you want to consider the current accounting year, 1/4/2020, which will end on 31st/3/21. Yes, so this is the accounting year, and if you want to consider this in this context, so non-current assets, the assets which are going to have a life of more than a year. So say for example, you have purchased an asset during this year and which can also be utilized for the next year, coming next year and again the next year. That means the life of an asset is long. Such assets are called non-current assets. Yes, let us consider the examples for this. This will include land and building, furniture, machine, etc., etc. Yes, these all the assets are having life more than a year. Long term assets is also the other name of non-current assets, or say fixed assets. Now these are again of two types. Non-current assets are of two types, tangible and intangible. Tangible, the one which can be seen and touched. Intangible, the one which cannot be seen and which cannot be touched. Tangible assets are having physical existence. Yes, the examples for tangible assets are here. Intangible assets could be goodwill, patent, trademark, copyright. Yes, these are the examples of intangible assets. Moving towards the explanation of current assets. Current assets, what does that mean? Any asset having a life of a year, yes, fall under the category of current assets, also known as short-term assets. The examples are stock of goods, debtors, bills receivable, receivable income, and many more. They have been given in your textbook below the definition. We'll understand all of this one by one, but these are just the examples. Consider stock of goods. Stock of goods you have to purchase again and again. Why? Because you are involved in a commercial activity which is of purchase and sale. Yes. So stock of goods is an current asset. In short, assets having life of a year, yes, are current assets. Now, fictitious assets. Okay, the realizable value of fictitious assets is 0. Yes, actually fictitious assets are a part of an expense, a huge expense which has been conducted in advance, and that expense is to be written off every year, like issue of debentures with discount. Yes, now what are debentures? You might question that because you don't know still. So debentures, you have a chapter in detail about this in standard 12th. So the meaning of debentures will be clear during that time. But for now, in short, fictitious assets are an amount which is not written off in a year. A huge amount of expense that you have paid and you will write it off every year partly. Okay? And the realizable value of fictitious assets is 0. Fictitious assets are also known as deferred revenue expenses. Alright. So this is all about assets, an important topic. So the next thing that we are going to understand is the two related terms, purchase and sales, creditors and debtors. Yeah. We are going to understand these 4 concepts now once we are done with the understanding of assets. Let us begin. Yes. So, once you are involved in the activity of trading, yes, you are obviously involved in the process of purchasing and selling, which is actually known as commerce. Yes, commercial activity. So let us understand. Okay. Consider yourself doing some business activity. Yep. What is the main motive of doing business? To make profit. How do you make profit? The commodity that you will purchase, a unit that you will purchase for rupees 80, you will sell it for 100 or for 90 or for 85. Yes, you have purchased this for 80. Obviously, if you are going to sell this at a higher price, only then you are going to make profit, isn't it? 180, what is the difference? 20 rupees. 20 rupees is the amount of profit. Yes, of course, the selling price should be always higher compared to the cost price to make profit, isn't it? Yes. If you have purchased it for rupees 80, you have to sell it for 100, 90 or 85. In short, a price higher than the cost price. Yes, isn't it that simple? Okay. So this example makes one thing clear, that if you want to sell, you need to purchase first. Yes. At the end, it is the process. If you have heard, money purchases the product, product purchases money. Yeah. So you need to purchase first, then you will sell. Yes. So what are you going to purchase? The goods. Which goods? In which you are dealing. If you are dealing with school bags, you will purchase school bags. School bags are goods. You are a trader. So the item in which a trader is trading are goods. Yeah. We'll consider the same example, that you have visited Ahmedabad and you have purchased a stock worth rupees 1 lakh. Okay. Then you have visited Rajkot and you have purchased a stock worth rupees 1,50,000. And from Bhavnagar you have purchased a stock of rupees 50. Yes, rupees 50,000 I mean. So this is Ahmedabad, this is Rajkot, this is Bhavnagar. You want to create sufficient stock. Yes, these are school bags, these are handbags, these are some fancy bags. Yes. So once you went Ahmedabad, the bill is of rupees 1 lakh. You are a trader. You have visited Ahmedabad for purchase of necessary stock. Yeah. And the bill there arrived to 1 lakh. Now out of this you have paid 75,000. Remaining 25 you did not pay. You'll pay later. Here you have paid 50,000. Remaining you'll pay later. Here you have paid 10,000. Remaining you'll pay later. Consider this you have purchased from Mahesh Bhai, this from Ramesh Bhai, this from Mukesh Bhai. Yes. So Mahesh Bhai is your you visit regularly to him. Yes, and you are a customer to him. So he says it's okay, you pay 75,000 for now and 25,000 you pay within 1 month. Ramesh Bhai also said that yes, okay, 1 lakh you can pay within 6 months. And Mukesh Bhai also said that okay, you pay 10,000 right now, 40,000 you pay after 2 months. Okay, understand. So this is the amount that you have given in cash. Yes, this is the credit transaction. This amount you are going to pay later. So this is your, firstly this is your liability. What is your liability towards Mahesh bhai? 25,000. What is your liability towards Ramesh bhai? 1 lakh. What is your liability towards Mukesh bhai? 40,000. What is your total liability? 1 lakh plus 40,000 plus 25,000. 1 lakh 65,000. 1 lakh plus 40, 1 lakh 40 plus 20, 1 lakh 60 plus 5, 1 lakh 65,000. So your total liability is 1 lakh 65,000. This is the amount payable to third parties. Who are the third parties? These. Yes, these are the people, understand, Mr. Mahesh, Mr. Ramesh and Mr. Mukesh. These three are the people who have supplied goods to me on credit. Yes, so these three are my creditors. Three of them are my creditors. Yes, so people who supply goods on credit are your creditors. The three of them are my creditors. I have purchased goods of rupees 1 lakh from Mr. Mahesh. I have purchased goods of rupees 1,50,000 from Mr. Ramesh and goods of rupees 50,000 from Mr. Mukesh. Yes, they have given me credit period of this many months, that it's okay, you'll pay the amount within this duration, and this much amount I have paid on the spot. So this is the cash transaction, this is the credit transaction, we have already understood this. This is the total amount payable by the business, by me, if it is my business, by owner, by the business to the third parties. These are the third parties. Yes, they are not present in my business, they are outsiders. So this is my external liability. Yes, and these people are creditors. Okay, hope you are able to understand. So creditors is a new term. Creditors means people who supply you goods and services on credit. Yes, and the amount is payable to them. Okay, so these are my creditors and I am a debtor for them. The person who is supposed to pay is a debtor and the person to whom we are supposed to pay is a creditor. They are creditors to me, I am a debtor to them. I am a debtor for three of them. Debtor is a customer. Yes, I am a customer to these three people, to Mr. Mahesh, Mr. Ramesh and Mr. Mukesh. Yes, I am a customer of these three people. So I am a debtor for them, they are the creditors for me. Okay, fine. So I hope I'm clear with the term creditors by now. It was really simple and easy to understand. Now with same consideration we are going to understand the term purchase. I have purchased goods from them. Yes, I have purchased on cash, I have purchased on credit. So if I will, what is my total purchase? If I'll add this 1 lakh plus 50, 1 lakh 50 plus 1 lakh 50 is 3 lakh. So what is the total purchase? 3 lakh. Yes. What is cash purchase if you will total this? What is credit purchase? 1,65,000. What is the liability? 1,65,000. What are total creditors? 1,65,000. Yes. Creditors are a part of liability. Okay. So this is how it works. Yeah. Okay. So we have understood the term purchase, cash purchase, credit purchase, liability, creditors. All right? Yes. So now let us understand the opposite to this. Sales and debtors. Yeah? Okay. So sales and debtors are two related terms, just the way purchase and creditors are related. Understand. Now you have purchased goods. The example that we have considered right now, yeah, you have purchased goods. Why? Because you are a trader. You are doing a business activity. Yes. So now you are going to sell those goods. Yes. Okay. So here simply understanding, say for example, your mother, your sister, yes, they have visited a market for shopping. Yes. And they have selected few dresses for them. Your mother has selected 3. Your sister has selected at least 5 for her. So in all 8 dresses. And the place they have visited is a regular place. I mean, regularly they are doing shopping from that particular shop only. So they are a regular customer over there. Yeah. Now the total amount of 8 dresses, the bill is 5,000 rupees. So the bill is given to your mother, and your mother, she suddenly gets to know that she forgot her wallet at home. Yes. So what now? What happens in this case? She'll say to the shopkeeper that by mistake the wallet is at home, so I'll pay you within a day or 2. If my son visits, if my daughter visits, passes from here, they are going to give the same amount. The amount of bill 5,000 they are going to give you. For now, allow us to take these dresses. So the shopkeeper said, yes, there is no problem. You are a regular customer to us. We trust you. You may take these dresses and you pay us later. Yes. So the point here is that you have sold 5 dresses for rupees 5,000 on credit. Yes, because you have given dresses and the amount is receivable, is not received yet, does not mean that it is not going to be received. It is receivable. You are going to receive, but not now, in future. Yes, so that lady, the mother, is a debtor. And I am a creditor. Yes, again we'll consider this example. Your mother visits to a shop and the shopkeeper says that it's okay, you take these dresses, you pay me 5,000 tomorrow because you are a regular customer. So your mother is a debtor for that shopkeeper. Yes. Alright, so this highlights the credit transaction of sales. Consider yourself at this stage. You have sold goods of rupees 5,000 on credit to a person or to your friend's mother. Maybe she forgot to take a wallet. Yes. So you said that yes, please you take this and you pay me tomorrow. So you have sold goods on credit to her. Yes, goods of rupees 5,000. So this is credit sales. So that lady is a debtor for you. Yes. There are many people like this. Say for example, someone visited your shop and has purchased goods worth rupees 25,000. Yes, and the person paid 5,000 right now and says 20,000 he'll pay in installments. 4 equal installments each of 5,000 every week. This is again credit sales. Yes, so the people whom you sell goods on credit, yes, are your debtors. Your customers are your debtors. Yes, if you have sold them goods on credit, yes, they are your debtors. And if you have purchased goods on credit, then you are a debtor to the other party. They are your creditors. Yes. Hope you are able to understand, or else we can consider a simple example for better understanding. Okay, say for example, Mr. Suresh visits your shop and has purchased goods worth rupees 25,000 and he pays 5,000 in cash. Mr. Ramesh visits, purchased goods worth rupees 30,000, paid 10,000 in cash and remaining 20 will pay later. Yes? You are the owner, you are the trader. Yes. Mr. Suresh is a customer, Mr. Ramesh is a customer. They have purchased goods of rupees 25,000 from you. They have paid 5,000 on the spot. The other person, Mr. Ramesh, has purchased goods of rupees 30,000, has paid 10,000 on the spot, and remaining he says he is going to pay later. Maybe within 1 week and 1 month is the credit period that you allow. Yes. So understand the case here. I have sold goods of rupees 30 plus 20